Hello, investors. Hope you're having a great weekend and welcome back to the Revere Roundup weekend walkthrough with myself, Ted Zhang, and Connor Bates, Associate Portfolio Managers at Revere Asset Management. Today is Sunday, June 16th, 2024, and we'll be going over what we've seen last week in the markets and what we were looking forward to into this next week. So I'll jump right into it. As always, the trend gauge. Connor reviewed this last Friday. I'll be taking over tomorrow and we'll be switching off with Don on vacation. So the market leaders we currently have with the bullish uptrend, we still have many stocks acting well, but we do have the yellow sub arrow as we do see some deterioration in breadth in the leaders. Short term, we're still above the 21 EMA, but we do have the yellow sub arrow with the Dow mid caps and small caps below the A and 21 and even 50-day SMAs. However, since we look at the S&P and the NASDAQ as our primary indexes, we have kept the green arrow for now. Same thing with the medium-term trend, the 50-day SMA, the S&P and the NASDAQ are still above all key moving averages and even making new all-time highs. However, just again, like the short-term trend, the Dow mid caps and small caps are below. And long-term, we're still all above the 200 SMA. And as we talked about, and we talked about every weekend and week, as long as we're above the 200 SMA, there's not too much to worry about. So going right into it, start off with the S&P. Before I talk about this chart, just quick synopsis of last week. We had Apple zoom into all-time highs off its 2024 just developers conference where they revealed a bunch of AI plans with the iPhone and their whole ecosystem. And clearly institutions were very excited about it. There was pretty much 636 million shares traded. And on a big name like Apple, that is a monster move with monster volume. And then Wednesday, we had CPI come in lower than expected, which the market initially reacted really well at first, but the Fed later on in the afternoon signaled in their dot plots that they were not expecting 3 rate cuts anymore from their March meeting, but only about 1 this year. Even so, the S&P continued to make new highs later on the week. PPI also came in lower than expected on Thursday, and then same with consumer sentiment came in lower than expected due to higher prices and weakening income. And basically, the summary last week was Mag 7 domination, continued concentration in those names, and then breadth deterioration. So the S&P, we made new weekly all-time highs, extremely strong. Volume continues to be extremely strong. And then, however, the RSP, the equal weight, is painting a different picture, as we talked about, as Connor talked about Friday, with breadth deteriorating. However, this is still kind of just coiling. So that's not to say that we're completely destroyed in breadth right now. The QQQ, our NASDAQ proxy, even stronger than the S&P, a new daily and weekly closing all-time high. QQQE still forming a base like RSP, haven't made a new high yet. It's a pretty nice VCP forming here as we're tightening from left to right. So maybe we can get a little pivot and zoom into new highs. Mid caps and small caps on the news that we might not be getting as many cuts this year. We tried breaking out, but failed in short order back below the 10, 20, and 50, and the year-to-date highs anchor VWAP on both of these indexes. And the Dow as well, showing some weakness with those 2 indexes. The VIX, we had a spike of the VIX, but continues to get rejected. VIX stays depressed right now, which continues our smooth uptrend, as you can see in the S&P and the NASDAQ. Interest rates, or the bond yields, all retreat as well. The 1 years right here, 2-year, 10-year, and 30-year. And since bond prices are inverse, we see bond prices making higher highs. Connor talked about it Friday as well, that there might be a fear trade going on in bonds with just geopolitical tensions and political uncertainty in the Eurozone area. The dollar, once again, part of that potential fear trade, flight to safety, making higher highs. And what is interesting is traditional correlations are kind of all disconnected right now. Usually when the dollar is strong, stock prices are weak, and usually when interest rates or bond yields fall, we see a boost in mid cap and small caps, and we're not seeing that right now in the market's action. Gold, we had this strong move up into all-time highs, and now we're forming a almost textbook rectangle pattern. So we'll have to see where this resolves. Silver, it's pulling back to the 10-week, just starting to flag, so falling wedge forming. So we'll see where that goes. Copper, same thing. After making new highs relative to this point, we're pulling back here on lower than average volume. So we'll have to see if we maybe pull back to this prior high resistance area. Crude oil, we rallied so far to the 200, and we are rejecting that area so far. We don't want to see crude get too far above and push for higher highs, or else inflation might continue to be sticky. But at the same time, we don't want to see crude completely sink either, and that could transition the markets into more recessionary fear. And then Bitcoin, we started leaking off here with the close below the all-time high anchored VWAP in 50-day. And that is why in growth protection we trimmed some IBIT. And then we don't need to talk about Ethereum and Solana. Those are secondary cryptos. On to some breadth. The market monitor, the choppy nature of the market that we've talked about recently in breadth deterioration is also characterized here as well, with the flips between the red and the green that we talk about. And right now we're seeing more red. So more stocks down 25% plus in a quarter versus up dominating. And this is just a secondary indicator, but it has been a good gauge in the past whether to buy strength or not. So from this, at least, it's probably not as favorable to buy strength. However, as we talk about breadth deteriorating, you can see that a majority of sectors have the majority of stocks below their 5, 20, and 50-day moving averages. So these are getting into more oversold areas, and perhaps we see breadth come back into the market. And with the concentration, we just might see higher prices. Net lows came back into the markets, as you can see here, even though indexes are making higher highs and new all-time highs. So that is just something we're also looking for as well. This is the NASDAQ. And then NYSE NASI continued their downtrends and are actually heading into the oversold territory here. So that is just painting the same picture that breadth is deteriorating. And then same with the percentage of stocks above the 50, 150, and 200-day moving averages in both the S&P and the NASDAQ having bearish divergences. And then another bifurcated place that we're looking at is sentiment too. CNN fear and greeds and fear. However, AAII is seeing above average bullish sentiment and below average bearish sentiment. And the NAM is seeing back above in that 80 region. So relatively overbought. And then finally, just quickly talk about the probabilities for rate cuts. Even though the Fed thinks, or the Fed members and FOMC voting members think that there'll only be one rate cut by the end of the year, so far the market does not agree with them. In September, we have about a 70% chance of our first rate cut. November, right now, it's priced in at about 83% chance for a rate cut. And then December, we nearly it's almost guaranteed that we get a rate cut by December based off the market's price probabilities. So now I'll hand it off to Connor. He'll talk about some sectors and some stocks.
Yeah, so I'll kick it off with a couple sectors that I've been watching. And to be completely honest with you guys, been a little bit slow with just the breadth has been weakening a lot and not seeing a ton of new sectors and themes, but got a couple that I'm watching. So XBI is the first sector I'm watching, and this sector is sometimes a levered IWM. Their correlation is quite tight, but I like how this is coming back up on the right side, and bigger picture, I just really want to see this break out of this base. This is a pretty textbook stage one base. And from what we've seen, these can lead to some big moves. And biotech has been underperforming the market for years now. So if this can, break out through this base, maybe this sector could get some momentum. ITB is another one. So this has kind of just been going sideways for a couple months now, and notice that 100 level continues to hold. So, and a setup theme with the market extended is more so buying weakness in an overall uptrend. So this, home builders have been in a big uptrend, and I can just draw a line. This sector has been an uptrend, and this pullback down to the 100 spot looks like a pretty good risk to reward. XLRE, this is the real estate sector. Again, another double bottom base, has been underperforming, but showing some signs that it's trying to bottom out and maybe may start to get some rotation into it. And you can see the moving averages we have that like power of three setup. Notice how they're getting all super tight and prices stop going down. Silver, this is the strongest commodity right now. Gold broke the 50-day, copper broke the 50-day. Crude oil's well below the 50-day, but silver put in a hammer here off the 50-day, and chart looks really good. We just broke out of this big multi-year consolidation, and this is really the first pullback from that strong run. So the first pullback after a big base breakout is usually a buy. So I like how this looks. Software, this was underperforming for the last couple months. You can look at this relative strength line, but it's finally starting to perk back up. And Adobe and some of the other software stocks are looking a little bit better here. And then utilities. I was talking about this sector a lot as it was, coming out of this 66 spot. And for utilities, like this was a really big move. And now it's finally starting to pull back and give another opportunity. And I don't think the thesis or the theme for these utility providers and energy related names has gone away. So keeping an eye there, and you can notice stochastics getting pretty oversold. And like I just mentioned, buying support when the market's extended is usually a better option versus buying breakouts in the extended market. When the overall general market corrects, that's when you want to be buying breakouts, because those are the stocks that are showing the most RS. And I use the phrase all the time, but they're like beach balls underwater. So anytime the market bounces, those usually blast higher. All right, so those are a couple sectors I'm watching. Let's hop into some names. First name is Reddit. I've mentioned this one a couple of times. I was watching the 66 level, and it tried to go last week, and here's a perfect example of buying strength. If you would have bought that breakout, it just punched right back in. So I'm watching this. It's still the price action looks really good. So maybe it handles here, gets tight under this line. And then goes. That's on watch. SMCI changing character day last week with that huge volume. We kind of got that relative strength line starting to pop. And yeah, this looks good if it can let these averages hook back up, have a couple, I'll just draw kind of what I'm looking for, and then it could see a move. Kava, just going to mention this one really quick, just trading like a champ. Best name in the food group to me. And, it's had a huge run. So maybe it goes sideways a little bit more here and then goes for another leg higher, but can't ask for more in this name. NXT, so Solar's pulled back Friday, and this one finished just barely down. And, it came into this 61 level, which is a logical area to pause. So now if it gets a couple more days sideways and digest this move, as it just ran up from 40 to 60, but still really like the Solar names and how they're trading. ON starting to consolidate and digest this big move. Bigger picture, just really just getting going out of this consolidation, and these IPO names, breaking out of these bases has been a pretty nice setup theme right now. And I really like the group. Deckers is trading well. Crocs is acting really well. PDD, in this base, it looks good. And one thing I want to note, so this hit highs of 164 and pulled back, held that 21-day. Now It's getting tight. Looks like it through that 150 spot. Could make another leg higher, but what stood out to me is, K-Web's corrected about 15%, FXI, big correction. And then when you look at the PDD chart, this is barely corrected at all. That's just a natural pullback in an uptrend. So, and another name I was watching was Futu, but this kind of squatted and needs more time, it looks like. So this is the top name in the China sector that I'm watching. Coinbase, like Ted mentioned, it just keeps, anyone buying strength at this 260 spot, it keeps getting rejected. So it's coming back into that 50-day area. This is a pretty good support. So I'll be watching to see if that level can hold. And obviously we need Bitcoin to start cooperating a little bit more. But as we've seen, sometimes Coinbase can be green when Bitcoin's down. So that correlation is just always changing. Google, skate to where the puck's going. The big tech names have been so strong, and that's just a big reason why the market breadth is so bad. Everyone's going into these names. And one thing that I was thinking about was if you're a fund manager and you don't own any of these Mag 7 names and you're underperforming the index, well, your clients are going to be pretty frustrated, right? So the higher these go, it's just the more chase that these fund managers have. They have to get exposure, they got to track the market somewhat. And so that's like a thesis or reason I've been thinking why these have been so strong. And then the other side is they're just all cash cows. I mean, they're great companies with phenomenal earnings, with a great balance sheet. So it makes sense why they're moving higher. And now Google's looking to break out of this flat base. Chart looks really good. Spotify. So I mentioned it on the Friday market insight video, but again, another case of if you're trying to buy this breakout, it squatted right away. So pulling back, held this 300 level, and this base looks really good. And if you look at the weekly, what a beautiful trend on this one. And Spotify's been hiking their prices, and I think most people that use it are just going to pay for it because it's a great service. Palantir, haven't been watching this name, but this one is setting up a little cheat here. Finally seeing that relative strength line come back up, and in the weekly it undercut that key level and reclaimed. So I like the look of this one. And then Rocket, I mentioned real estate as a sector that I'm watching to potentially start to lead, and this is one of the better charts that I'm seeing in that space. And if you look at the weekly, this has got a base on base pattern, which I was talking about on First Solar, which can be super powerful. The leading stocks will be setting up when the sector isn't ready yet, and that's a lot of the times when you get that base on base pattern. And then once the sector starts to cooperate, you can see that explosive move. So yeah, so that's 11 stocks that I'm watching for this week. And then really quick, this is just some of the best performing groups and sectors with the leading names. So if you guys want to pause this and check out these names, I do this every single weekend. It helps me keep a good pulse for the market and have an idea where the money's flowing. So highly recommend it. This is spelled wrong. This is a good part of my process. So yeah, if you guys want to pause it and check it out. But yeah, so that wraps it for stocks and sectors. Ted, you want to take it back?
Yeah. So I'm going to quickly go over earnings. There's really nothing much this week. Just a couple home builders. Lennar is Monday after the close, and then KBH is Tuesday after the close. The reason I bring these up is because one of the data points or economic data points this week is housing starts and building permits. But aside from that, the key data point that people are watching is U.S. retail sales, which is at 8:30 a.m. Tuesday, June 18th. And this will really give us a gauge of just how healthy the American consumer is. And that is really important for the Fed as well, on top of them looking at inflation and the labor market. And then we just have a bunch of Fed speak as well, with 5 Fed speakers on Tuesday. And then we have initial jobless claims again Thursday. and the Flash US Services PMI and Flash US Manufacturing PMI Friday. And so that wraps up this weekend's weekend walkthrough. Connor, do you have anything else before we finally wrap it up?
Nope, just Ted and I will be doing all the daily videos this week, so we're excited to do that, and you guys get to hear us talk about the markets every day this week.
Yep, definitely. And then happy Father's Day to all the fathers out there. And then remember, this Wednesday we also have Juneteenth, so markets are closed that day. So we have a shortened week in the markets. All right, thank you for tuning in to this weekend's weekend walkthrough, and we hope to see you guys back next weekend.